Hello everyone, I am Ryotaro Nakayama, President and Representative Director of Makuake Inc. Thank you very much for taking the time out of your busy schedule to watch our video presentation on the financial results for Q1 of the fiscal year ending September 2026. Despite significant shifts in the domestic and international landscape, our company has had a very strong start to this fiscal year. Today, I would first like to discuss our Q1 financial results, then explain the full year forecast we announced at the beginning of the term, and finally touch briefly on our medium-term management plan. Now let me begin with the Q1 financial results. To summarize the Q1's financial results, starting with our performance. Net sales reached 1.46 billion yen, representing a 49.2% increase year-on-year, and operating profit was 330 million yen, a 232% increase year-on-year. Both figures show significant growth. Both net sales and profits have significantly exceeded the Q1 plan. This growth was primarily driven by a surge in total transaction volume, fueled by the creation of large-scale projects centered on home appliances and gadgets. Compared to the initial business forecast at the beginning of the period, our progress is extremely favorable, but we are currently carefully reviewing the full-year business forecast. Regarding the KPIs, the number of active projects during the month is 1,038, which is a 3.6% decrease year-on-year. On the other hand, the monthly project unit value is 1.77 million yen, representing a 49.9% increase year-on-year. Regarding the significant increase in monthly project unit value in Q1, we were able to generate multiple projects exceeding 100 million yen each month, so the inclusion of these large-scale projects resulted in figures that outperformed our expectations. The slight decrease in the number of active projects remains an issue, as we are still in the process of establishing a structure that encourages repeat engagement from project owners. On the other hand, we are seeing strong results in acquiring new project owners. Regarding the progress of our medium-term management plan, since we are significantly exceeding this fiscal year's profit targets, we are aiming for the early achievement of the medium-term plan. At the same time, we also plan to make additional investments this fiscal year to further strengthen our business structure. In addition, by strengthening the category of embodied AI hardware, which is currently a new global trend and whose usage of our platform is also increasing, we aim to incorporate this as a hit category that can drive our company's growth. I'd also like to touch on the external environment. While there are diplomatic concerns between Japan and China, the willingness of overseas businesses to enter the Japanese market with finished products remains robust, and at present, we do not see any trade-related regulations in place. Furthermore, due to the weak yen and high raw material costs, the demand among small and medium-sized enterprises to create high value-added original products remains strong. On the consumer side, while the awareness of saving money continues, there is also a growing trend of selective spending, where people actively purchase products and services that enhance their daily sense of fulfillment. Let's take a look at each of the figures related to business performance. First, regarding the total transaction volume, this has grown significantly, reaching 5.689 billion yen in Q1, a 45.1% increase year-on-year. Excluding the figures from the COVID-19 pandemic, this is the largest amount on record. One major factor is that, as mentioned earlier, we were able to continuously generate large-scale projects. In addition, increases in advertising agency distribution amounts received from project owners, as well as the enhanced support capabilities of related departments such as curators and project legal teams, who are increasingly leveraging AI, have also contributed to these results. Net sales have also increased in tandem, and while this is partly due to the growth in total transaction volume, as mentioned earlier, the increase in sales from our advertising delivery agency has also contributed to this result. Regarding the take rate, it has risen to 28.3%, which is a higher level compared to the past. This quarter marked our highest net sales since the company's founding, even compared to the projected figures we had at the beginning of the period. Assuming there would be no conservative negative assumptions due to external factors, the numbers have significantly exceeded expectations, mainly because large-scale projects grew substantially. Gross profit has also increased accordingly. One point to note is that the gross profit margin of advertising delivery agency is not as high as the others, which has resulted in a lower overall gross profit margin. As for SG&A expenses, they have decreased significantly compared to the previous quarter. This is mainly because, in the previous quarter, we made a large one-time investment to strengthen our human capital. While we continued to invest in human capital development to some extent this quarter, the overall scale of such investments was relatively smaller, which resulted in a reduction in total SG&A expenses. Additionally, as the gross billings from ad agency services handled by project owners have increased, we have also been able to reduce our own advertising and promotional expenses. As for operating profit, with the top line growing and costs continuing to be well controlled, operating profit increased by 232.6% year-on-year to 330 million yen. This also marks the highest quarterly operating profit since the company's founding. Here as well, the results significantly exceeded the planned figures and the assumptions based on positive trends in net sales and the external environment. Regarding the key KPIs for the Makuake business, the active project count during the month was 1 to 38, which is a decrease year-on-year. In this case, while the number of projects is lower than in the fashion or food categories, we prioritized acquiring actions in the home electronics and gadget category, which has higher project unit value. As a result, the number of cases has decreased, but as a company, we believe that ideally, the number of active projects should continue to grow even as we shift our focus to such high priority categories. While new customer acquisition is progressing smoothly, we recognize as an issue that we have not yet fully established a structure for retaining project owners, and the degree of repeat engagement remains insufficient. On the other hand, the monthly project unit value saw a significant increase. This is the result of focusing on genres that tend to involve larger projects, which led to both the number and value of large-scale projects increasing. As a result, it reached 1.77 million yen, a 49.9% increase year-on-year. While we do intend to gradually grow this area, we do not expect it to continue at such a high growth rate. Please interpret this as a temporary surge due to large-scale projects. As a result, both net sales and profits have exceeded the initial business forecasts, and in particular, profits have significantly surpassed expectations, achieving over 80% progress beyond the plan. Regarding the full-year earnings forecast, we need to further scrutinize the balance between the expected profitability of our existing businesses and the extent to which we will strengthen our strategic investments. Therefore, we have decided to maintain our full-year earnings forecast at least until the second quarter. What we want to prioritize is mainly investment in strengthening our business structure. This means not only focusing on the debut market for new products, but also developing competitive services within the post-launch distribution and retail ecosystem. By doing so, we will build up customer assets, which will simultaneously expand our stock-based revenue structure. As a result, this will help suppress high volatility in our business performance and make it easier to achieve sustainable growth. Therefore, we intend to pursue this policy without wavering. Within that storyline, we are currently considering prioritizing the allocation of Q1 excess profits to strengthening investments, mainly in areas related to the general distribution promotion of new products as strategic investments. At the same time, we will assess the progress of existing businesses and, depending on disclosure requirements, aim to provide an updated and more accurate full-year earnings forecast around the time of the second quarter financial results announcement. Next, regarding the main projects that attracted attention in Q1, it was a period in which high-priced, high-value-added products stood out, especially among small and medium-sized businesses. Electric work chairs, a cinema-grade premium projector costing 400,000 yen, and cutting-edge items like AI-powered glasses also stood out. Well, I actually saw the projected image from the real projector myself, and it can project an image even larger than a big-screen TV. The picture is extremely vivid, and when you consider that you don't need space for a TV stand or anything like that, even though it's an expensive product, I got the impression that it's excellent in terms of both space efficiency and cost performance. Also, in the No Sheep Needed series, this time the comforter was a hit, but in the past, starting with pillows and including mattresses, companies that have developed hit brands centered on bedding have repeatedly used our services. The category of sleep tech items using such advanced materials is also a strong field for Makuake as a distribution channel. Even among large corporations, products that improve quality of life through AI and R&D technologies have been growing. Here as well, products featuring AI-equipped watches, bedding, and apparel items made with advanced materials are standing out. At the same time, global brand companies are using Makuake to increase their track record and marketing insight in the Japanese market, leading to a trend where they prioritize strengthening their new product businesses in Japan. As a result, more of them are repeatedly using our services. In fact, during Q1, I personally visited iFlyTech, a company located in Hefei, China. I found myself wondering just how many Tokyo domes would fit in there. At that massive development hub, I had the opportunity to see firsthand the site where AI and hardware are being developed simultaneously. I got the strong impression that products like these will continue to emerge, not just from this company, but from many others as well in the future. In fact, there is talk that the penetration rate of smart home appliances in Japan is lower compared to the United States and China. However, with the advent of AI appliances, just as every household purchase must have appliances like TVs and fridges during the period of rapid economic growth, we are hopeful that AI appliances have similar potential. As a main player in this distribution channel, we hope that our company can also contribute to updating people's lifestyles. Customers continue to use products and services that are mindful of the environment and sustainability, which enables us to support a wide range of new challenges. As topics for Q1, we have listed 3 items this time. The first is that we announced the official launch of the Makuake store for EC Mall service. Makuake Store, which handles products that debuted on Makuake, is strengthening sales channels for ongoing sales by opening stores on major e-commerce malls such as Rakuten, Yahoo, and TikTok Shop. As a result, we have received many requests to use this service from numerous businesses that utilize Makuake. Secondly, this year, based on the results analyzed using Makuake Insight, we announced our annual trend forecasts for 2025 and success predictors for potential hits in 2026. Through these kinds of announcements, we hope not only to let people know that we possess a wealth of trend and forecast data on new products that could become hits, but also to strengthen our presence so that our company comes to mind when creating new products. Thirdly, this year as well, we announced the Makuake Award. Out of approximately 5,000 projects carried out on Makuake, we selected and honored 25 projects based on various criteria, including support and encouragement from supporters, total purchase amount, communication with supporters, social significance and topicality, and the scale of impact within the industry. The Gold Award was given to a whiskey project by Kirin Beer, where the innovative concept is that each year, for the next 20 years, a whiskey with a different level of maturation will be delivered. This bold challenge to create a new whiskey culture has generated significant buzz, making it this year's Gold Award winner. For the Silver Award, we selected the AI notebook developed by iFlyTech, and as I mentioned earlier, we highly evaluated the fact that it has achieved significant results among AI-equipped hardware. For the Bronze Award, we chose the project by Ochiairu, a long-established inn in Izu with a 150-year history, which created rental villas with saunas. As for the Makuake Award, I feel that the level has been rising year by year, and the social impact of the projects we are involved with is also growing. Please continue to keep an eye on us in the future. Next, I would like to once again touch on the business forecasts for fiscal year 2026 that we announced at the beginning of the term. As I mentioned earlier, our earnings forecast for this fiscal year is net sales of 4.76 billion yen and operating profit of 400 million yen. Currently, progress is going smoothly and even exceeding our planned projections, but I'd like to touch a bit on the background behind how we set these figures. To put it simply, first in terms of sales, one point is that we are prioritizing the maintenance of systems that are over 10 years old, so we have not factored in the addition of new features to existing businesses that would significantly impact performance and beyond on the development side. Also, from another perspective, since many of the cutting-edge home appliances and gadgets are used by overseas businesses, we have taken into account the possibility of decreased transactions due to the uncertain global market conditions, resulting in a conservative plan. In terms of operating profit, we have adopted a conservative plan here as well, as we intend to prioritize investments mainly for upgrading our business structure, as well as investments to enhance our human capital, such as strengthening internal systems and reinforcing organizational capabilities through recruitment. As I explained earlier, the main reason is that, especially in terms of international affairs, there has been almost no negative impact on finished products, which led to a significant outperformance in Q1. For our initiatives in fiscal year 2026, we would like to prioritize strategically upgrading our service value, not only in terms of providing value in the debut market for new products, but also in the distribution and retail markets, so that we can continuously help our business clients expand the sales and profits of their new product ventures. In this context, we will continue to invest in projects that lead to structural reinforcement, in comprehensive AI investment, and in the development of human capital capable of making these a reality. First, regarding our existing businesses, as I mentioned earlier, we are incorporating non-humanoid physical AI-related products, and through strengthening our services in advanced home appliances and gadget categories, including these, we will also work to grow our existing performance. Looking at our medium-term milestones from a broader perspective, our plan for fiscal year 2026 is to leverage our improved cash flow capabilities and steadily advance investments to upgrade our business structure. Furthermore, from the perspective of enhancing human capital, we already consider our ability to recruit diverse talent as one of our strengths. However, as a milestone goal, we aim to foster an environment where this strength can be fully leveraged by promoting the adoption of various policies, such as behavioral guidelines, and by upgrading our evaluation and compensation systems to accelerate this process, thereby increasing engagement and motivation within the company. At this point, I would like to explain the business models of the new businesses our company is working on as part of upgrading our business structure. First, regarding Makuake Insight, this is a research service that provides data analyzing the true feelings of consumers based on the purchasing data accumulated within Makuake and feedback from over 3 million members, tailored to the needs of businesses. As for our specific service lineup, we offer spot plans for research tasks like online surveys and interviews, as well as targeted email distribution to reach potential customers during general sales. Additionally, we provide a monthly subscription plan that grants dashboard access to platform data at any time. Through these services, we enable research during the planning stage and marketing analysis during sales, thereby serving as ongoing support for operators' new product ventures. Another service is Makuake Store for EC Mall. After a project ends on Makuake, we sell the project owner's products under the Makuake Store brand name within major domestic EC malls. This service supports project owners in smoothly expanding into the general distribution market, and a certain percentage of the sales amount becomes our commission. Additionally, regarding logistics, we store inventory as consignment stock in warehouses, partnered with our partner companies, enabling a model where we can provide next-day speedy delivery to purchasers from there. For our company, by continuing to handle products that debuted on Makuake, we position this as one of our structural reform initiatives that allows us to contribute to the sales of those products over a longer period. In Q1, both services performed generally well, but since their impact on the company's overall results is currently minor, we are refraining from disclosing detailed figures at this time. We will continue to steadily build up our track record so that this can become a pillar of our future earnings. I will omit the details of the medium-term management plan, but while aiming for the numerical targets set in the plan, we will also focus our investments on establishing a unique position in the distribution and retail market for new products as part of our structural reinforcement. Our plan is to strengthen the recurring revenue structure of sales and profits, along with customer retention, by expanding and developing our target markets beyond just the debut market and upgrading our business structure. If you haven't seen it yet, I hope you'll take a look. And finally, this will be the last part of my presentation, but at present our company has built up some good momentum. On the other hand, in order to achieve more sustained growth, we believe it is necessary to upgrade our business structure at this point. If we succeed in doing so, we expect that not only will our existing businesses accelerate their growth, but this will also lead to significant overall growth for the company. The fact that this is happening, I believe, is a reflection of our ability to provide services that make it easier for businesses taking on the challenge of creating new products and services to boldly pursue their efforts. We remain fully committed to executing our strategic initiatives and delivering value to our stakeholders. We sincerely appreciate your continued support.